Good morning, everybody. It is Mark Sebastian, your only option. And today we are doing our ticker highlight show. And of course, welcome to the ticker highlight show. I am joined, as I am every Monday, by the pair that perfects my trio. One, Andrew T. Giovinazzi, the Viking of Queen of the Candles, the premier of the pitchforks, prime minister of pitchforks. How about that one?
How about the pitchfork princess?
Well, she's not a princess. She's more of a queen.
Right, right. The princess.
That's like calling a prince a king. You know?
Yeah, I got you. Okay, all right. I can
follow
that.
Work.
I can follow that.
But the Optimus Prima of yes.
The pitchfork prima. I like that.
Yeah.
The pitchfork prima is not bad.
Yes.
Sounds Italian.
It does. Like
I don't want that to turn into pitchfork prima donna because Leisha is anything but.
No, but
you can accuse Leisha of many things, but a prima donna, not.
it brings Maria Callas.
You're right about that, Mark.
All right. So, but folks, we're having ourselves a great time as we do every Monday. And this week we're looking into Apple. And Leisha is going to break these down in a pitchfork. But before we do that, I just kind of want to talk about what's been going on with this thing. Their earnings were not good. Their earnings were not good. Declining revenue. Declining sales. Now they're still making a lot of money, but they are not the powerhouse of revenue. They make more money than everybody, but their revenue isn't growing. They're not growing new signs of their business. Buffett is selling what, 15 million shares or 50, a good chunk.
Well, he already has. First quarter.
What?
First quarter, he sold 15% of his holdings.
Yeah, 15% of his holdings. Now, he still holds a ton of it, but I think he's out there making a point that, you look at the prospects of Apple, and, it's kind of funny. Since in May 4th of 2023, Apple was trading 173.5. Prior to its May 2nd earnings, it was trading 173. If you look at all these numbers going back to 2023, there is not a lot there. It has literally not done much at all for north of a year. It's paid dividends, and they're buying back a ton of stock. That's the other piece of news. Apple has $54 million in cash on hand, which sounds like a ton. And they do have a ton of positive cash revenue. But if you've got $54 million cash on hand, why are you buying $110 billion? $110 billion of stock. That is like 4% of the value of the company. They're just going to buy back stock. That's after the amount of stock they've already removed from the market. What that tells me is that they have a complete lack of any vision for the company other than to continue to just milk phones. And long term, I think that we're in the November, December of Apple's time as one of the Mount Rushmore stocks for the stock market. And this buyback smells a lot like IBM in 2013. IBM's plan was to, they were going to unlock shareholder value by buying back a ton of stock. I believe that the big announcement was 2013 because I remember reading about it as I was walking to the train. And it maybe, it was snowy out. So I think it was in March-ish of 2013 was when they were doing a lot of it. And lo and behold, the next quarter, and I believe Andrew and I made a lot of fun of the management team, the stock absolutely tanked. And I asked everybody, why are they buying stock back up here? And they had slowed down their buyback to almost nothing in the 180s. It was embarrassing. Apple reeks of IBM. Apple needs new leadership. Tim Cook did some really good work. It is time for him to go. So that's my long-term view, but that has nothing to do with what Apple might do in the short term. Apple is just coming out of a pretty rough stretch, had a really nice gap, and has now kind of settled on a spot. So, on the near term, I don't know exactly what I'd want to do here, which is why I would turn to the premier of pitchforks, Leisha Leslie, and obviously I'm sure she's going to be looking at candles as well. There's a lot to look at. So this is where we put the rubber to the road, and Leisha's going to break down what we're looking at.
We are looking at my pitchfork and Apple that goes way back to January of 22. It's over 2 years. Look how well this has honored the parallel. The median line is the red line. The other lines are parallel to the median. Upper and lower bounced off the very lowest, sold off the top a couple times now. Very good pitchfork. It is a larger pitchfork.
The longer dated the pitchfork, the more you can honor it.
Yes, the more it honors. Yes.
Can you just give us a 20 seconds on what a pitchfork is, just for people that don't know? Can you give us 20 seconds?
A pitchfork grabs. You grab your pitchfork right here in Trading View, which is for free. Pitchfork right there. You grab the high, low, high, or the low, high, low, depending on if you're in an ascending trend or descending, like this is descending. So this older pitchfork is very large. I added a couple of others to be able to follow where the stops will be, where Apple will turn around. And it has followed this descending pitchfork till earnings. It was holding it here until the earnings came out. And sure enough, right in on the earnings announcement, it traded to the top of my new pitchfork and tested. It actually traded down, tested the second parallel on the older pitchfork. And that is where it's trading right now. Now, very interesting what in pitchforks, almost always, when, as you know, especially if you're an option shopper, the close is so much more important than intraday. Now, this closed right into this more recent pitchfork. Now we're trading down into this newer pitchfork. This morning, we retested that top of that pitchfork. That could truly be a sign of your opportunity to sell it. Almost always, we close below it. Now, the next day, we come and test it. There's where your opportunity lies, and it sells off from there. Now, I would like to see it close below here. We also have the 200-day coming in at 181 at like 16. So a close below 181 and Apple will be on its way to closing the gap, trading down to the median line, 175, 176, and even lower to close that gap. And that comes in right here, 173.40.
All right, so you would have it heading back toward 175 here.
Yes, but we do have, it may wallow for a while because we do have support. If it closes, it could consolidate around this line. Remember, it does one of three things. It bounces or rolls over, it consolidates, or it zooms through. Right now, it looks like it's consolidating. We have a convergence of this upper line and this line. So it has to make a decision. Is it going to me, it looks bearish, but we also have the 200-day, which will provide some support at 181.13. So could consolidate a little bit here.
Yeah, the 200 and the 100 are basically on top of each other. I've got the 100 at 180.68, and yeah, you said 200. I've got 181.13. So that could provide some support. But the Buffett stuff, throws me.
Before I go though, if you'd like
Yeah.
to learn more about pitchforks, you need to sign up for a pitchfork class.
Yes, that's part of the pitchforks. What I love about what Leisha's looking at is she's giving us short term and long term, and we're sitting right on that long term parallel.
Yes,
and so that is kind of a decision making thing. We're going to know in the next day or two what direction, likely with 80% confidence, what direction Apple is moving.
Exactly.
We will know in the next.
So how much? So how much stock does Buffett own right now in Apple?
I'm going to stop sharing to get the link to share. You're up, Andrew.
Oh, okay.
Yeah, and that option shop and that class is free if you join Option Shopper, and we're running just an incredible deal on Option Shopper right now. So feel free to.
Did you get Leisha every week?
Yeah, you get Leisha multiple
every
times.
Tuesday.
What a bonus! All right, I'll share my screen. So I was looking at that breakout level, Leisha. All right. Well, let's take a look here. A couple of vol things. So,
the professor of pitchforks.
She is your pitchfork professor.
I don't want to be a professor. I don't want. Sorry,
she's not going to be a professor. All right, there you go.
I like Prima. I think Prima was good, Mark. The pitchfork Prima, like boom.
Yes, I might be going with pitchfork Premier. I kind of like that.
I don't mind that.
The pinnacle of pitchfork Premier.
So, Leisha, you have your little pitchfork thing. It's kind of got like a little breakout thing going, right?
A breakdown.
Huh?
It gapped up on earnings, but now it's kind of breaking down. But it's sitting at a level, so.
Pitchfork too. Okay.
So
anyway, what I want to show you guys here is, okay, so Warren Buffett, let's say maybe he's selling some stock or whatever. So my guess is he's going to start to lighten up a little bit.
He already is.
Yep. And do you think it's possible that Warren's selling, Apple buying the stock back, which I feel is kind of okay, who's smarter, Tim Cook or Warren Buffett? Tim Cook is going to spend the next 6 months buying his stock back, and Warren Buffett is going to sell it at a 600% profit. I don't know. I'm just saying. All right. So what we have now is you've had some this was a relative, I would say a spike here, a gasp.
Yeah, gapped higher.
How do you
reversal though? That big red candle's a giant reversal on earnings day, Andrew.
Really?
Yeah.
Oh yeah, my gosh, I didn't even notice that. Oh, how do you tuna fish? You play at scales. That's a quality dad joke there, Vicky.
Yeah, you can tune a fork, but you can't tune a fish. It's a good old Rocky 5 reference.
So in my head here with the vol this low, I would go. I think you want to own some options. Normally after earnings, you don't. I think we could probably get away with some put calendars here.
I think we 100% could get away with some put calendars. Right back The 200 is all the way. The 50-day is back at 172. The 21 is all the way down at 170. I like. Oh wow, and the options are not expensive. The 175 puts in July are only $2.90. The 180s are $4.50. I kind of like the 175 better. And the May, let me see. You're getting over $1 for the June. You're getting $1.20 for the June 7th. So approximately 1 month. So 1 month from now, you're getting $1.20 for the 175 put. And then in July, which is 2.5 months. So another 6 weeks later, you're only paying $2.90. That I think is that. So you're getting $1.20 for a month, and then you're only paying $1.70 for the next 6 weeks. That to me is pretty good, a pretty good payout. And that, but I almost want to wait a day to see this thing close below that big median line, because as Alicia pointed out on her charts, that we want to see where that thing is going to open tomorrow, right? Let me steal this. Have you steal it back? 1 second.
Sure.
So you don't think it's headed for Palookaville here?
I do, but
be.
Alicia made a very strong point. All right, on her 2-year chart, right, that this thing has been honoring. It is sitting on literally on the parallel. And Alicia, would you argue that we probably don't want to get short if that thing opens up above the parallel tomorrow?
Right, exactly. Well, you do have this other line seems to have some validity too, right? We closed right on it. Yes, a Friday, and then tested it this morning. So there's some action going on because of these two lines converging here.
But I think
it needs to trade away, or otherwise it may consolidate here a little bit.
Yeah, I would rather put this trade on with Apple at 181.75 or 181.5, knowing it's going with a real confidence that it's going lower, than try and force this a day after earnings, just because I agree with you, Andrew. I really like that trade. If you wanted to, maybe what I would say is you could kind of hedge your bet here, and this is something people will do. When you have a conviction, long term, we think Apple's going lower, right? You don't have to slap on the entire conviction at once. So
that's true.
If I wanted to this trade costs about $1.70, what I could do is put on one calendar tomorrow, see where Apple is tomorrow. If Apple's closes below, all right, below that parallel. Now I've got some more confidence. Even though I'm paying a little bit more, I can add to that trade. All right. Now, if it goes up, I don't. Losers average down. Smart traders add to trades. There is a difference. All right. There's a difference between averaging down and adding to a trade. So I have no problem adding to a trade, but I have a huge problem averaging down. All right.
Yeah.
And so that would be a method of applying, because the other thing we have is, what if the market goes to 52.50, right? Apple, it could just drag Apple along,
It could. And someone asked why a put calendar. We're thinking put calendar because we're short. We're thinking lower. Our bias is it's going lower. And we don't want to pay a lot for the July further out, so we sell the closer option to bring down our cost.
Sorry,
I'm
talking over you. Keep going.
Volatility, you're paying as little as possible for the options right now.
Yeah, Alicia, I'm sorry, I didn't mean to interrupt your thought.
No, that's all right. Someone was just asking why the put calendar.
No, it's a good question. And so, and what if I was buying a 185 put, I wouldn't be putting on a calendar. Maybe even if I was buying like a 182 or a 183 put. But we're also setting this thing up out in July, so 2.5 months away, and about 4% out of the money, 5% out of the money.
Right.
So it's got plenty of
I'm
room
still trying to get Mark's
slowly
trade out of
pull back. We're not looking for a violent move lower. Apple typically doesn't have these, typically has a trend, but it's a slow moving trend. It's not an easy one to just sit there and short or be long. And plus, like Alicia said, it may consolidate here for a little bit.
Oh, Howard's saying that Apple flies seem cheap. They could. You know what, though, Howard? The vol is just so low. Like the price of options are so
Howard,
low.
I see what you're thinking, and there may be a zone trade in Apple here in the next few days. All right, everybody. It is 8:55. Andrew, do you want to put out a partial trade to start
trying
the
to figure out what your trade is. I need you to slow down for a few seconds and write it down.
Oh, yeah. It's the June 7, July regular, 175 calls put spread for $1.70.
Oh, okay. Okay. So July, what is it? July, that's 19. Let me see.
Yeah.
Here. July 19, June 07.
175.
June 07. 175. Put calendar for how much?
170.
170.
Okay.
You like that?
But we want to, you got to watch out for the 200 days just below here, offering support, and we're on this line. I guess since you're in the calendar, it's okay if it consolidates, I guess, right?
Yeah. Well, what I would
better than just flat out buying puts.
Right.
So if you want to go in early, I think you're okay.
Yeah. So what I would want to do is, our long-term goal, if we want to put $500 in this, we'd buy 3. I'd start with 1 just to kind of start the position. And then if it goes our way, then if it breaks Alicia's major levels, that's where we want to jump in and put this on with some more size.
Alicia, so what's your kind of upper level where you're like you'd say, the gig is up and the stock's going up? Just what's a level?
If it rallies, I'd say if it trades above this, the top of the earnings day, if it trades over 187, that's support. That'll be resistance right there. Okay. If it trades over 187, then it could trade back up to 200.
Okay. All right. So above 187, you hedge or kill.
Yeah.
Anything right in there, though, the calendar should still perform below that level.
Yeah.
Okay. So this would be buy to open. This is buy. Okay. Yeah, I like any of these cheap put calendars. I would even do a diagonal calendar to lean a little shorter. I think this whole $10 rally is going to be crap. Like they're all buying the stock up because they're going to buy more of it while Buffett's selling it. So it's another thing. Like you get a little up, you get a little down. Well, the 12 delta is relatively easy to manage.
Yeah.
Here, this is a put calendar. All right. So you're buying the July. You're buying. Oh, I got to go to trade desk. Buying July, and you're selling June. Okay.
Yes.
Okay.
All right, everybody.
Awesome.
So I'm going to work this. I never filled the TSM last week. I did have some people asking me about it when the stock traded back to 185 or TSM traded at 135 again. If you fill that thing, you should have closed the call calendar when it went back to the strike. So that trade actually would have worked out okay. Dell, I've traded 1x2s against my 140s after I sold the puts. So I'm a little green on that. Anyway. I'm going to give this to Christian, and I got to split.
Yep. All right, folks. And again, Alicia, if you're interested in pitchforks and how they work, we're all it's becoming a bigger and more valuable piece of my trading and investing. You can see how powerful it is of a technical indicator. It's building them that is building them and refining them that takes the work, and then knowing how to trade within them. And Leisha's giving a class on that on Thursday. It is $199 for the class, which is a great deal. Or if you join Option Shopper, it's only $799 for a year, which is an absolute steal. So you're getting this $200 class. You're getting 50 sessions with about 50 sessions with Leisha and about 100 trades, and you're paying what amounts to $600. That to me is just an absolute ridiculous deal. So if you've not joined Option Shopper, this is the time to do it, and this is the time to join. There is the link. I will drop it into the sticky as well to join. Or if you've got questions, give us a call, 888-872-3301, or email us support@optionpit.com. So we saw off the Viking of Volatility. Leisha, thank you. You are Queen of the Candles, the pinnacle and premier of all things Pitchfork. And I am Mark Sebastian, your only option. We hope you have a great trading week, everybody.